Hello, welcome us on Crypto Arts Fire Coin in crypto. Bitcoin options market signal upside price risk despite warnings of possible Fed for its sell-off. In this news, we are sharing an important US topic. This is very exciting news. Bitcoin options markets continues to signal near-term upside risk to the BTC price despite warnings from strategists that Wednesday Fed meeting caused trigger a bloodbath in cryptocurrency markets. According to a chart on the blocks, the widely followed 25% deltas skew of Bitcoin options expiring in 7 days reminded at further 44 on the 30th of January. Not too far below recent multi-year highs hits earlier this month in the 909 area. The 25% delta skew of Bitcoin options expiring in 30, 60, 90 and 180 days were all between 0.5 and 2.0, indicating more of a natural market was thou also remain close to multi-month highs. The 25% delta options gap is a popularity monitored proxy for the decay to which trading risks are over of undercharging for upside or downside. Projections view the put and call options. They are selling to investors. Put options give on an investor the right but not the obligations to sell an assets at a predetermined price, while a call options gives an investor the right but not the obligations to buy an asset at a predetermined price. 25% delta options curve above zero suggests that this car charging more for equivalent call option versus push. This implies there is higher demand for calls versus puts, which can be interpreted as a bullish sign as investors are more eager to secure protection against or bet on rising prices. Elsewhere, the Bitcoin open interest put call ratio on dominated crypto derivatives exchange and derivatives on the 29th of January slumps to a new record low at 0.38. That means that investors favor buying call options. Bets on the price rising over put options bet on the price dropping by a record margin. A Fed meeting might trigger a crypto pledge. The Fed is widely expected to raise interest by a further 25 bps on Wednesday, taking the federal funds target range to 4.50 4.75%. A 25 bps rate hike will thus come as no surprise and should not move markets at all. What matters to markets is the outlook for interest rates, more especially how many more rate hikes will there be, and how long will interest rates be held at the respective terminal rates. Market seems to be taking the view that after Wednesday hike, the Fed will only lift interest rates by 25 bps one more time in March, and will then start cutting interest rates in the late 2023. That seems to be based on the bet that one US inflation spiral wages pressures will continue to slump back toward the Fed 2.0% target, and two, the US will enter a recession later this year, meaning the Fed will have the room and desire to start cutting interest rates to support the economy. But strategists are worrying that markets are underestimating the Fed's resolve to raise interest rates and hold them at destructive levels for longer. According to popular Pertimor's micro focus Twitter account, the The Goldman Sachs US Financial Conditions Index (FCI) is now at its lowest level since September 2022. The Goldman Sachs US FCI is now slightly below the December level, which promotes that the real tightening barrage. Carter thinks that as a result, there will be blood on February 1, with Fed Chairman Jerome Powell to tighten financial conditions by forcefully addressing rate cuts, i.e., bets on rate cuts head-on. The Powell Fed is laser focused on not permanently easing policies to avoid the bounce Fed stop and go error. Carter continued, adding that the May discussion of rate cuts is anathema to the Fed border tightening project, a violent upward repricing of the Fed interest rate intentions over the coming year. Ferrous markets are forced to price interest rates moving and staying above 5.0% for the remainder of the year, while likely trigger a big move higher is the US dollar, a US bond yield, and downside in assets like stored gold and crypto. Despite this dire warning of an imminent potential bullwhip in the BTC price, options market also do not seem too concerned about an upstick in volatility at the money. ATM implied volatility of option expiring in 7 days time was last around 60%, roughly in line with where it has been since the middle of January and still below its average level of 2022 and 2021 under 30%. 21 throws still substantially up from record loss printed earlier this month under 30%. Thanks for watching. I hope you will like my video. Please do not forget to subscribe our channel. Keep our season. Nice video.